Good morning, everyone.
It is Kelly Turner from Total Mortgage.
And Sanam Solati Yurczyk with New England Prestige Realty. And Happy
New Year!
Yay! You had a good vacation,
I
right?
did. I was in Disney for the week.
That's amazing.
It was a great way to ring in the new year.
You came back with a glow.
It was not warm in Florida.
No, we had nice, modest, warm weather here in Connecticut.
Yeah, it was like 42 the first day we were down there, which like Disney's not really built to be 42. But it was really funny because like being from Connecticut, we still had like fleece zip ups and shorts on.
Yeah.
Where the Floridians were in like sweatpants, winter boots, parkas, hats, gloves. And I was like, we are not built the same.
No, it's too funny. Your body definitely acclimates. It's funny. I think we beat you in Connecticut. We were in the 50s.
Yeah, right.
Like Christmas week. Yeah, it was pretty nice.
Pretty nice.
Yeah.
Very nice. Well, what are we here to talk about today?
Yeah, just like some new trends that we're seeing, like with what's happening in the real estate market. As we're moving into 2023, we've had a lot of buyers kind of sitting on the sideline with all the interest rate hikes, like, and all the like chatter about, affordability kind of diminishing. We have noticed, I guess, that there haven't been as many changes happening, and the people that are waiting are maybe waiting for no reason.
Yeah, I would really agree. I have had a lot of buyers, and buyers have been sidelined over the last really now 3 years for so many reasons. First, interest rates were low, but competitive offers were high. So if you had less than ideal financing, you were on the sidelines.
Yes.
Then we had borrowers that just made so many offers in 2020 and 2020 when they were exhausted and they needed to take a break. Yeah. Then as interest rates started to increase, we had borrowers who said, I'm going to wait for rates to go down, and they sidelined themselves.
Yeah.
So we've seen a lot of reasons that we've watched people pull themselves out of the housing market.
Yeah.
The downside to that is all they really did was put themselves into a rental market that is equally as unfriendly.
I would agree with that. Forget the prices for rental markets. When a buyer is ready to buy, like if they find the perfect place to call home, they do need to put their best foot forward. We're not seeing as much appreciation with the inventory that is out there. However, the astute sellers, they're actually pricing their home below fair market value.
Yep.
And in any market, regardless of where we're at with anything, right? If you price it below where it's supposed to be, it will generate that auction effect.
Yeah, people get, oh, this is the deal. This is a good one. Yeah. Everyone's going to be going for it.
And so then they oftentimes will drive up the prices, and good for them for being smart, rather than some of the sellers that are still kind of reaching for the stars, because we're not there anymore. But with those, inventory is still very tight.
Yeah.
I'm just going to share some numbers in Glastonbury to kind of put things in perspective. And this is really eye-opening. So this is just for January alone. So I'm comparing all the January months starting back in 2019 for single family homes.
And 2019 was, just so everybody, it was the last normal market that we had.
Yes.
So that was the last year that things looked normal.
Yeah. So back in 2019, Glastonbury, Connecticut had 53 single family homes active for sale. Seems pretty healthy, right?
Yeah.
Enough inventory. Like that's actually a healthy market. Once 2020 hit, January of 2020, it dropped a little bit, but not a lot. It was 43 homes for sale. And then 2021, we dropped down even more to 30 homes for sale. 2022, there were 20. And now we're hovering around 14-ish for single family homes. So like, hopefully that's like eye-opening.
Yeah, there's not a lot to be had.
No.
So if you're a seller,
we're inviting sellers to come list their homes.
Put your house on the market.
We need inventory.
Yeah, the inventory is needed. But I also think if you're a buyer, that's an important number to kind of wrap your head around, in that it could discourage you to say, maybe now's not a great time. But you also have to be realistic in that if you want to buy a home, this market is here for a while, right? Yeah. We're on multiple years of this particular market happening. There is not some floodgate that's going to open up and all these houses are going to come flowing out. People have been sort of bantering that around for the last year that, are we looking at 2008 where all these distressed homes are going to come on the market for low prices? Nothing in the markets is currently indicating that.
Yeah.
Foreclosure rates are not going up. The distressed home rates are not going up. People if they can't sell, they're going to sit.
Yeah.
They're not going to get rid of those houses like
Or
it
they'll
happened
rent.
in 2008.
But a lot of people, they took advantage of the low interest rates and they refied.
Yeah. So they're currently sitting. So if you're a buyer, you need to be prepared for a couple of things, right? Number one, this is going to take longer than normal. Okay. So you're not necessarily going to say, I'm going to buy a house and 30 days later, you're going to be under contract. And that's in 2019. That was how
pretty
it went.
normal. That was pretty common. Absolutely. With my renters, I would say, okay, 3 months before your rental is up, let's start looking. Because 6 months in advance was too much time.
Yeah. Now 6 months,
6 months is a good time.
Is a good time. The second thing that I think you really need to be prepared for is competition. And how can you prepare yourself for that? So I was telling Sanam when I walked in, Sanam and I haven't seen each other since before the holidays.
Yes.
So there's a general state that if you want business, go on vacation.
Absolutely. Then the floodgates open.
It happens every single time. That's what happened to me last week. I had prior buyers from a year ago, 2 years ago, 3 years ago, 5 years ago, kind of coming out of the woodwork saying, I'm ready. Let's do this. Yeah. So I think that people recognize that this market is not going to shift in the way we thought it was. We didn't really think, but some people thought it was going to. Yeah. 2023 is a new year. And if you're going to buy, you have to be prepared. And number 3, the early bird gets the worm.
Yes.
In this market.
Yes. So what I'm also finding too, though, like the early bird, so getting in to look at the house is awesome. A lot of sellers are holding off, not all of them, but they're waiting. Like if they have 20 or 30 showing requests, they're waiting to get through all of that to kind of bring in as many offers to, again, create the highest and best scenario for them. So with our buyers, when we're guiding them based on factual information, it makes sense. If the house checks off like 8 out of 10 like must haves, you might really want to consider putting your best foot forward, because if you miss out on that, who knows when the next amazing opportunity like this is going to present.
Because there's not a lot of inventory.
There's not a lot.
So going in strong. The other thing that we are seeing though is in 2020 and 2021, cash and conventional financing won.
Yes.
That was it. If you were not a cash offer or you were not a conventional mortgage, it was not going to happen for you. It was really, really hard. We are finding that as so many buyers have pulled themselves out of the market, 100% government loans, so FHA, VA, USDA, things like CHFA, time to own. We are finding what was once considered less desirable, which is unfortunate because it's just different needs for different people.
But it just adds another layer of concern for sellers. It's another layer. It's another contingency.
It's another contingency, but we are finding those buyers are finding a lot more success in this market than they were even 6 months ago.
Yes.
So if you're a buyer who sidelined yourself because you weren't getting offers accepted, now while there's not a lot of people in the market, it's a better time.
Although they're starting to come out.
They're starting to come out. So I had a lot of applications in the last 2 weeks, but a lot of people, and they're being very smart. And if we could give you this advice, me as a lender could give you this advice. This is my number one piece of advice. Quality matters in loan applications right now. And in order for us to have a really quality loan application, we need time.
Oh, you mean you don't want to call on a Saturday night at 8 o'clock? Hey, I found a house.
Well, and that is what's happening a lot. And I can absolutely approve people in those situations, but it's not the best version of an approval that I can give you. So if you do not know, there are 2 versions of mortgage approvals. They have many different names depending on the company, but one is essentially where the loan officer looks at your information. They usually run you through either Desktop Underwriter or Loan Prospector. Those are our 2 computer programs that all lenders use. And you get an approval. And it's essentially, some people call them pre-qualification, some people call them pre-approvals, but it's a letter from the loan officer stating that, yes, based on the information we've seen, you should be able to get approved for this loan. That's version 1. We can do those on the fly. Okay. Version 2 is a fully underwritten mortgage commitment.
That sounds a lot better as a listing agent when I'm coaching my sellers on which offer is stronger. That's what we want to hear.
Exactly. We've collected all your documentation. We've run credit. We have your verifications of employment.
You've been scrubbed.
You have been scrubbed. An actual underwriter has gone through your file. They have unearthed anything that could be an issue. We have solved it already, and we have a full mortgage commitment. What does that do for you as a buyer? It, number 1, assures the seller the hard work's been done.
Yeah.
I am very committed as a buyer because I've already done work.
Yeah.
Number two, it assures the seller that the closing can sometimes be at their convenience.
Yeah.
Because we can close those, we
Quicker.
guarantee in 21 days, but honestly, we've closed them in as short as 7 days.
That's amazing.
So all we really need is maybe
this used to be unheard of before.
And it is becoming much more common. I will tell you, like Total Mortgage is really well known for them. We call it our green light program. It's something that we essentially funnel 80% of our buyers into this program automatically.
Yeah.
Like, great, we got your application. Thank you. We're going to send you right to green light. It makes our lives easier. It makes the buyer's life easier. It really makes the seller's life easier.
It's great for when buyers are looking at vacant homes, like estate homes or homes that have been turned over, like, maybe flips or whatever. Because nobody wants to hold on to a vacant home for an extended period. So if they can close quickly, it definitely sounds you're just as good as cash.
Well, and that's exactly what happens is these offers look just as good as cash, but those are not automatic. So we do need a little bit of time in order to produce those, get the right documentation in. Sometimes conditions come out, we have to go back and forth. So if you are thinking that the spring is your time, okay, and I know there's like a lot of people out there, they're like, I'm going to buy in the spring. Right now is when you set your financing up for the spring market. Right now in January, you don't wait until March or April, because in March or April, you've already lost the house.
And right now is also a really good time to connect with your real estate professional, to sit down when there's not a little bit of a frenzy, to kind of understand what the whole buying process looks like. We sit down with all of our buyers and we go through every piece of the puzzle so they really understand it. Because what you've heard from your brother, your mother, your friend, and this and that may or may not be true. So we want to kind of go through everything and set those expectations. And then also to help you find the proper home, we'll set you up on a search. Like just the other day, last week, Facebook changed their rules. Like a lot of people that look for homes and see it on Facebook Marketplace, that's not allowed anymore. Like, so rules are always changing, but when you're working with a professional, you have that constant stream of news, information, and just stability.
Yeah, so people know. Now, the other thing that I want to address is interest rates, because that's the other piece that has people thinking in this market, good, bad, otherwise. A couple notes about interest rates. So interest rates obviously steadily increased in 2022 until we hit a peak right around the beginning of November. And that was sort of the real high where we were seeing average daily interest rates above a 7. Now, please remember that average daily interest rate doesn't mean your interest rate. The average daily interest rate with certain parameters that most normal people don't actually hit.
Sure.
But the average daily interest rate was over a 7. As of November 10th was the date that the first improved consumer pricing index report came out. So the CPI report, it was the first one we got with better news. And we have now seen a decline in interest rates, and they are back under 7. And it's slow. It's volatile. So do know that every day rates look a little bit different as every piece of news comes out. We did see some improvement this week with some lower inflation numbers in Germany and in Japan, and that does impact our rates. But we are we've hit the crest of the roller coaster hill. We're sort of sitting on top right now, and we're going to start to see them head back down. Now, we're not going to they're not going to go down quickly like they went up quickly. But we're sort of watching this slow crawl to a better place. And, you as a buyer, what should you do and not do? You should not be waiting for a bottom.
No.
Okay. That's the biggest mistake that you can make currently, because number one, we have no idea when that will be. We have no idea what that will be.
Sure.
Okay. The bottom could be 6 for the foreseeable future. So if you're waiting for something more, you can never get there. The other thing that's going to happen is the moment we start to see the sort of momentum for interest rates, we're going to watch
all the floodgates open.
All the buyers, but it's the buyers that are going to come out. We're not going to watch the listing floodgate open. No. We're going to watch all the buyers coming out. And that is where all of a sudden we're going to start to see prices appreciate again. And you don't want to be caught in that.
No. But again, buyers forget, like you always said this to me, like when I have buyers that shop different mortgage brokers or banks or whatever, that, you can quote them whatever interest rate they want. You can buy down your interest rate. If you find your forever home, you can buy it down to whatever interest rate makes sense for you. Like that's an option.
And that's gotten a lot more affordable over the last couple of weeks. So like I was quoting out a borrower yesterday, and her par rate, so the rate with no points for her in her situation, every situation is different, but this particular borrower situation, her rate was right around a 7. Yeah. But for 1 point, so 1% of her loan amount, it was a 6.125.
That's
that
a
made
huge
a
difference.
couple $100 a month difference for her. And what are the conversations we're having? She could have continued to buy down. Her lowest rate available was in the 5s.
Wow.
So we could have continued to go down, but we also have to think,
What's a break-even point?
what's a break-even point, and what do we think a refinance potential is going to look like? So I'm kind of encouraging borrowers right now to kind of find a midpoint in points, to say, okay, let's buy some points to make this affordable for right now.
Yeah.
But let's not throw all our money in points, because the probability of you as a borrower refinancing your mortgage in the next 2 years is very high.
Yes.
It's very high. So we have to just be cognizant of that, and like, let's make it so we'll be happy no matter what.
Agreed.
The other thing to know about refinancing as well is it feels daunting for people, like, oh, it's just like another thing I have to do. First off, refinancing is way easier than buying.
Yeah.
Okay. There's no timelines like when you're purchasing. You need less documentation. There's no sellers there. It's just your attorney. It's much easier. Number two, you don't have to be in charge of that process. So one of the things that I have in my particular company, not everybody has this, is we actually have a computer program that every single day scans all of the loans that I have closed, and it's cross-checking what current rates are. And if there's a favorable finding where it says like, oh, this borrower may want to refinance, I get like a message saying contact this borrower, and it will do all the calculations for me of what they may save. And so like, it's set it up.
High tech.
Yeah,
That's pretty awesome.
Total Mortgage is great. It's very set it and forget it for you as a borrower. Like, you don't have to be following this stuff on your own. I will reach back out to my borrowers and say like, hey, if you are someone who did not close with me, but you'd like to be set up in this system, we call them those mortgages under management, mums.
Okay.
You can get yourself put in a mortgage under management program with me, where I will start watching yours in my program, and we can sort of contact you when it's time.
That's pretty neat.
Yeah,
that's
very
awesome.
high tech.
Set it and forget it.
Exactly. We'll reach out and say, this is the time.
This is your time. That's awesome. Yeah, because they change like daily, minute. Like it's always changing.
Yeah, it's always changing. But I think the big highlights here are, if you're a seller,
please put your house on the market.
Please put your house on the
market. Now would be
market.
a good time.
We have so many buyers who want to buy your house.
We do.
If you are a buyer, get started.
Yeah. Get started now. Again, even if it's 6 months from now, a year from now, start connecting with your professionals so that, you can understand the whole process, get prepared so that you're in a position of strength.
Yep. And when the right house comes on,
Jump on it.
We're ready for you.
Jump on it.
Yeah, don't wait.
No.
Don't hesitate. Do not lowball or whatever.
Just do what makes sense.
Yeah, for you and your situation. And what my favorite thing to say about the real estate market, the real estate market doesn't dictate your housing needs.
No.
You dictate your housing needs. If your housing does not work for you, then it's the right time for you to buy.
No.
So if your rental's not working, if your current home is not working, long-term real estate always wins.
100%. And that's a wrap.
Bye.
Guys, we'll see you soon. Thanks for watching.